from the Washington Post. According to a report by the Washington Post, Mark Paulson bought a bottle of Domaine de la Romaine Conti Lacher in 1970s and left it alone unopened inside a cardboard box in his basement for decades. Paulson initially purchased the 1971 bottle for $250, the equivalent of $1,889 today when adjusted for inflation. In March, it was reported that the bottle was headed to auction, where it was expected to fetch between about $50,000 and $80,000, according to the auction house Bonham Skinner. It ended up selling for $106,250. The 3-liter bottle is exceptionally rare. When he purchased it, Paulson was working as a commercial painter. However, he had a niche interest in rare high-end wines. Makes a lot of sense for worthy conversation about how things change over time and the auction market. Let's move to the US. The US President Joe Biden and top politicians, Republican Kevin McCarthy, have called their latest talks on the debt ceiling productive, but no deal has yet been reached. While acknowledging areas of disagreement, Mr. Biden said a default was off the table. The debt ceiling is a spending limit set by the Congress, which determines how much money the government can borrow. Failure to raise it beyond the current cap of roughly $31.4 trillion by June could result in the US defaulting on its debts. That would mean the government could not borrow any more money or pay all its bills. It would also threaten to wreak havoc on global economy, affecting prices and mortgage rates in other countries. Republicans, led by McCarthy, have been demanding more than $4 trillion spending cuts in return for raising the ceiling. Democrats have refused and instead are offering to keep spending flat. Stocks and treasury yields tumble. What could happen now if they default? Let's find out more from Bright Cove Report, the report.
Payments on its
to the markets if the U.S. defaulted on its debt. Well, the short answer is that we don't know, because with the exception of a
technical glitch in 1979, the U.S. has never missed payments on its debt. On August 2nd, 2011, the U.S. had a close
call with politicians resolving their differences only at the last hour, preventing a default. Going into that close call, equity markets fell sharply. The S&P 500 lost nearly 20% of its value, while small and mid-cap stocks fell by over 25%. Among equity sectors, regional banks and financial stocks were among the hardest hit, losing approximately 1/3 of their value. As equity prices fell, bond prices soared, driving the yield on the 10-year U.S. Treasury down by 200 basis points, even as the ratings agency S&P downgraded U.S. debt from AAA to AA+. Meanwhile, gold prices soared by $400 per ounce. Now, 2011 is just one data point, and in 2023, both the political and market dynamics are different. Back in 2011, the U.S. economy had low inflation, zero rates, and the Fed was doing quantitative easing. The current situation is very different. The current budget and debt ceiling debate occurs in the context of 5.5% core inflation, rising interest rates, and quantitative tightening. So what happened in 2011 may or may not be a useful guide.
The concerns are there regarding the debt ceiling, and if nothing gets to happen, we might see shockers all around the world. Let's move to Asia. Indians are exchanging 2,000 rupee notes at banks as the country aims to withdraw the currency from circulation. The note was introduced in 2016 after the Indian government withdrew 500 and 1,000 rupee notes. Indian Prime achieved its goal. The notes can be exchanged until 30th September. India's central bank has said that though 2,000 rupee notes, India's highest denomination currency note, would be removed from circulation, they would still be legal. Reminds of events that unfolded in Nigeria before the elections. Now to the Nigerian talking points. Africa's richest man, Aliko Dangote, proudly inaugurated his mega oil refinery in Lagos, Nigeria. The highly anticipated project signals a significant milestone for the country's energy sector, aiming to meet domestic fuel demand. Aliko Dangote said, the refinery is poised to reduce Nigeria's reliance on fuel imports and reshape the energy landscape. The federal government could save about 35 trillion naira in fiscal expenditure within the next 5 years with the commencement of operations at the Dangote refinery and petrochemicals, according to reports. Sounds like good news from an African point of view, because 53 countries in Africa depend on fuel imports. Governor of the Central Bank of Nigeria, Godwin Emefiele, has revealed that the Dangote Group has remitted 70% of the loans it obtained from the Apex Bank to build its oil refinery. Speaking at the commissioning of the refinery on Monday, he said the commercial loan component of the project was financed mainly by domestic banks, while the rest was made available by foreign banks. According to him, the CBN provided about 125 billion naira for domestic currency requirements, while also ensuring the availability of foreign exchange FX to pay for imported equipment. According to Emefiele, the total loans outstanding have dropped from over $9 billion when the project started to 2.7 billion naira. This reflects the astute credit worthiness and commercial capability of the group and its chairman, Alhaji Dangote, he said. Still looking at talking points in Nigeria. The federal government on Monday announced that no unlicensed petroleum products dealer would be allowed to load products from June 1st, 2023, as it vowed to shut down such businesses beginning from that day. It warned that from June 1st, 2023, anyone who wants to deal on petroleum products must obtain a license, stressing that no license, no loading of any petroleum products. The government gave the warning in Abuja through the Nigerian Midstream and Downstream Petroleum Regulatory Authority at the stakeholders' engagement on gas utilization in Nigeria. The objective of the engagement was to enlighten operators and to engender the transition from white products to gas. Also, the Director General of the National Information Technology Development Agency, NITDA, Kashifu Inuwa, has said that almost 80% of Africa's foreign direct investment ends in Nigeria. According to him, the Nigeria tech ecosystem has attracted about $4.4 billion investment in 2015, 2019, and 2020 cumulatively, and ICT contributed about 18.5% to the country's gross domestic products. Inuwa said at the Leaders Without Borders Annual Business Summit and International Honors 2023 in London. The DG said that NITDA, as the government agency established in 2001 to help Nigerians in the use of information technology, had supported about 753 startups in different ways through training, seed funding, and grants. It would be a good time to move to global economy to look at the standings in global data, beginning with economic calendar. The expected data to be released today, the economic calendar. According to economic calendar today, as at 2 a.m. in the morning, it began with Judo Bank Manufacturing PMI flash in Australia coming out at 48 points, still the same standing as previously. While there were also outlook at 1:30 a.m. for Japan. Regarding bank services PMI, the Purchasers Managers Index, also there were current account identity in India, and as well as Singapore's inflation rate year on year. Inflation rate in Singapore, higher inflation status in the country, Singapore. Talking about markets. Markets remain fixated by Federal Reserve policy, with the regular remarks of Fed officials provoking intense speculation. But although higher interest rates have indeed caused a bear market in equities and taken the bloom from the housing market, it also clear that these developments would automatically cause job losses or a recession. So what is the real key to understanding the present economy, especially in the US? Let's hear from Blue Putnap, Chief Economist of the CME Group, regarding this.
The U.S. job market remains quite robust, despite the Federal Reserve having raised short-term rates at a rapid pace from near 0 to 5%. Interest rate policy changes impact asset prices directly and feed through to economic activity much more slowly. Near zero interest rates helped propel stock prices higher and supported rising home prices. Higher interest rates caused a bear market in equities in 2022 and took the bloom off a surging housing market. But downward asset price adjustments do not automatically cause job losses or recessions. The pandemic recovery process remains key to understanding the economy. Sectors that benefited from the pandemic, such as technology, social media, Wall Street, among others, hired aggressively to take advantage of the opportunities presented to them, and now they're downsizing to a post-pandemic recovery.
Let's come to Africa, beginning with Ghana. The Bank of Ghana held its benchmark monetary policy rate steady at a record level of 29.5% during its May 22, 2023 meeting, after raising it by 150 basis points in March. The decision was driven by expectations that inflation will continue its downward trajectory as food prices are likely to ease over the harvest season. Additionally, the recent approval of a 3-year, $3 billion loan from the International Monetary Fund should support the city. Ghana's annual inflation rate fell for the fourth month to 41.2% in April 2023, the lowest in 6 months, down from 45% in March, and a more than 2-decade high of 54.1% in December. Sound like good news from a Ghanaian point of view. Let's look at the state of things, inflation in Morocco. The annual inflation rate in Morocco eased to a 9-month low of 7.8% in April 2023, down from 8.2% in the previous month. Transportation prices edged down at a negative 0.1% against 5.1% in March, while the rates of increase eased for furnishing and household equipment, clothing and footwear, recreation and culture. On the other hand, prices accelerated for food and non-alcoholic beverages, restaurants and hotels, and miscellaneous goods and services. On a monthly basis, consumer prices surged by 1.4% in April, after increasing by 0.1% in the prior month. The National Bureau of Statistics in Morocco, inflation in the country stood at 7.7% in July 2022, it went further upward to 8.3% and dropped slightly to 8.1% as of October 2022. By January this year, inflation had gone up to 8.9% in Morocco, indicating a higher cost of commodities as well as a weakness in the currency of the country. It went to a peak point of 10.1% before dropping slightly to 8.2% and afterward 7.8% in April, indicating some improvement on one hand after the struggle in the country Morocco. We'll go on a short break. When we return, we'll be talking about commodity markets and the foreign exchange market. Don't go anywhere. Welcome back. It's Business 360. I'm at a seasonal increase in demand. However, a host of unusual dynamics in global oil markets are generating some price contours. Here's what you need to know about the oil outlook for this summer season. Insights from Bob Isino, Trading Partners.
Oil prices have been facing downward pressure, but the summer driving season, which typically brings the strongest demand, is fast approaching. So does that mean prices will immediately rebound? Not necessarily, since they are mainly fallen by 1.1%. Typically, the demand for gasoline and jet fuel increases in the summer months due to higher levels of travel. But travel has been unseasonably strong essentially since the pandemic ended. This phenomenon may have pulled forward some of the demand that would usually appear during the summer months. Unusually active central banks have changed the exchange rate dynamics, and one of the world's major oil producers is still involved in a war. Seasonal trends alone are never a reason to go long or short a commodity, but this year with crude oil, that statement seems especially valid.
To the energy market. Let's see what the identities are in this market this morning. The US crude and Brent crude Nigeria's price benchmark, the energy market. The morning market has come with different outlook, but mostly decline. Crude oil, the US crude, which is the West Texas Intermediary crude, $72 per barrel. No significant difference in the market, 0.05% appreciation for Brent crude. Let's move to the metal market and see what the standings are in the metal market. The price of gold, silver, and the rest. The market this morning has seen huge decline. For gold, it's dropped by 10.22 points, a negative 5.2% drop. Silver also dropping slightly, negative 1.79% decline. Copper on the decline, steel also dropping 31 points. Current price for steel is $3,500. Price of wheat. Wheat price is dropping by 13.5 points this morning, $1,327 per bushel. I mean, that's for soybeans anyway. For wheat, it's $598 per bushel, dropping by 7.9 points. Lumber, a little here, a little there. Malaysian ringgit per ton for palm oil is 3,386 Malaysian ringgit per ton, dropping 42 points, a negative 1.2% decline. Cheese is a little here, a little there. The Kenyan shilling reached a record low of 187.06 units against the US dollar, despite a government-backed deal to curb its depreciation. The deal involved importing fuel on credit, with expectations that it would ease demand for the dollar and strengthen the local currency than before. Experts attribute the ongoing drop to pent-up demand for the dollar from sectors such as manufacturing, suggesting that the impact of fuel deals may take several months to materialize fully. Let's jump straight to the market and see what the outlook is, the euro against the US dollar, and afterwards, Naira's perspective against the majors, the market this morning. The currency pairs have seen their own fair share of struggle, just as other markets is hugely on the decline. No volatility in the morning market. Euro against the US dollar, 1.08 point mark. Pound against the US dollar still standing as at yesterday's closure of the market at 1.24 point mark. Let's look at Naira's perspective in the market then. This at the gain against the Naira, 501 Naira equaling 1 euro. The euro gaining 3.78 points against the Naira. For the pounds against the Naira, 576 Naira equaling 1 pound. The pounds is gaining 3.93 points against the Naira. Let's move to the black market and see what the indices are in the black market this morning. The black market. The black market gets a struggle. Naira gets a struggle in the black market comparatively to what's happening at the international exchange window. 762 Naira equaling $1 at the black market, and the buying rate and selling rate 758 Naira to $1. For pounds to Naira is 962 Naira to 1 pound. At the buying rate and selling rate 940 Naira to 1 pound. At the selling rate for the euro to the Naira, it's 800 cryptocurrency. Let's see what the standings are in the morning market. Bitcoin gaining 405 points this morning, a 1.5% increase. Current price for Bitcoin, $27,300 for 1 Bitcoin. Ether also gaining 37 points, $1,855 equaling 1 Ether. For Binance, 3.9. The rest of the cryptocurrencies are a little here, a little there. Not much volatility in those, but it shows positivity in the Bitcoin and crypto market. It's time to look at the stock market. I will center stage on the Nigerian stock market. The Nigerian Stock Exchange appreciated in value by 0.34% on Monday as the market capitalization of the bourse increased from 28.42 trillion naira to 28.52 trillion naira. This means the Nigerian equity capitalization increased by about 100 billion naira. The growth was driven by the 181.2 basis points gain by the all-share index, which rose from 52,187.93 points to 52,369.13 points. Let's look at the top gainers. Ikeja Hotel led the gainers list with a 20 kobo rise in share price to move from 2 naira 3 kobo to 2 naira 23 kobo per share. Looking at the bottom losers. NCR topped the losers table after shedding 30 kobo to drop from 3 naira 9 kobo to 2 naira 79 kobo per share. The top volume. Zenith Bank led the day's top trading with 53.43 million shares, valued at 1.38 billion naira. This would give the outlook to what could happen in today's market. And here we draw the curtain in Business 360 today. Thank you for watching. My name is Blyden Ken.
Business exists only to